Right, we're looking at the British pound futures June contract, and this is a daily chart, and we can see that the pound has come from this high all the way down to this low, just above. We're looking at 135.67 down there, down to a low of 11438 ish down there. So let's see why it stopped here. So I'm going to pull down some Fibonacci lines. Price retracement lines from this high. It's the last swing high down to the swing low, and we can see it stopped at just short of the 61.8%. But let's see what that means in terms of the very high up here. Get it right, just there. That's the exact 50% of the entire move down. Now we want to know where it's going to go down. Clearly it's coming down. Is it going to continue? That's what we want to know. So we want to pull the Fibonacci lines from the low up to the high. So we take the Fibonacci tool again, go from the low up to the high, and the absolute minimum this is going to come down is going to be to the 38.2. Now, if it stops at the 38.2 and continues going up, that would make it extremely bullish. Given the economic circumstances and where we're at in the UK, being in lockdown and the stock market is not doing great, I would imagine it's going to come lower. 50% is also very bullish. So I would say that we're looking at this area here, 61.8 down to 786. The pound, I think, is going to go down to around here. So in terms of trading, it means we're looking for short sales to be on the safe side. Now, if we go down to a lower time frame, so down to a 60-minute. Now, this is the 60-minute. We're zooming in now to the part of the drop on the daily chart, which is this part here. And there's our Fibonacci line still showing on the 60-minute chart. Let's correct this a little bit if we can. It's not quite right. Just up to there. That's it. A bit bigger. That's it. Not quite there. There we are. Now we're looking at a minimum correction of down to this area here, which is around 121. And currently the market is sitting at 122.81. So we should be looking at smaller time frames, looking for shorts. Now this has started moving up from this point, so we need to be careful of how far up it's going to go, and maybe even take some longs, knowing that it's going to go up a little bit. So again, using the Fibonacci tool, and this is purely based on Fibonacci. There are many other tools that we use, but I'm going to focus on Fibonacci today. Price retracement, taking it from there to there. We've not even reached the first Fibonacci line yet. I would expect this to come to around here, around about the 123.80 area before it continues down. Now in terms of harmonics, what does that mean? If we start to draw these out, because markets do move in pulses, if it has moved down to there, we know that for a fact. Now we're going to project that if it moves up to the 61.8 to there, then it's likely to make a similar move down of this one. So I'm going to copy that line and I'm going to project that onto there. So that works out really well. So if it moves up to the 61.8 and makes this would be a classic AB equals CD pattern of what we study in our courses, A, B, C, D, which will take it down to the 38.2. And that's what we're looking for. So that's the pound. In terms of what it means for the economy, because the pound continues to be bearish, then I would not be thinking that the economy is going to turn anytime soon. That's not rocket science, given the lockdown we're in and businesses are closed, stock market is crashing. But we'll look at that next. So for the pound, that's what we're looking at. We're looking at a correction up to around this area, and then coming back down to the 38.2, perhaps another small correction up, and then continuing even lower. Okay, so that's the pound. For the S&P 500, we're looking at the daily chart here of the June contract, and you can see we've come down from this very high here down to this low. I've drawn the Fibonacci lines down from the high to the low, and you can see it stopped at the exact 38.2, which is very bearish, very, very bearish, and we're coming down. I've projected these lines here, okay? So we're coming down. If we were to stop at the 61.8, project this move here from the 61.8 up again, then you can see that I'm suggesting that it may come up to this area here, coming down and then back up again. So as long as you've got this sort of projected map, I'm not saying that it's set in stone, of course it isn't, but then we have an idea of where the market could go. Understanding these Fibonacci lines is very, very important. Now, knowing that the market has come down this far and that it stopped at the 38.2 is extremely bearish. Now, it may not stop here, it may continue going down, okay? But the best guess we can make is that the market doesn't go in one line, particularly after a drop like this. It's going to wiggle around, okay, before it drops again. It's just the way of the markets. In my experience over the years, this is the sort of thing that I see. So this is the sort of analysis you should be doing, and this is what you should be watching for. So if you were wanting to trade this market tomorrow on Monday, then I would suggest that you're looking for shorts to be on the safe side, and you'll be looking for patterns similar to this on the smaller time frames. The markets do move similarly in all time frames. So you'll be looking for patterns similar to this, in ratios similar to this, in the smaller time frames. Okay, so S&P 500 remains bearish. In the short term, it's going to be bearish. In the medium term, it's going to be bullish as it corrects. In the long term, I feel it's going to be bearish, given the economic circumstances, the lockdowns that the entire world is in. I feel that the economies are going to be hit hard, and so it's going to wipe value off of companies, and that will be reflected in these charts in terms of a fall in value. Now next we're going to look at gold. Gold has traditionally been a flight to safety. Whenever markets are in trouble, investors will tend to move their money from stocks and shares into gold. And this is clearly reflected in gold here. This is a monthly chart, and you can see in the last few months gold has been rallying, but we have a pattern which my students will recognize as being a bearish Gartley pattern, where this is where it starts from. That's X. There's A, B, C, and D. Now, this is a very bearish pattern. However, this is a monthly chart. Every bar is a month. We can see in the last month, and this would have been March, you can see there's a huge indecision with what's been going on around the world. What's been going on around the world has created this indecision, and you can see that the market started here, moved lower, moved higher, and then finished up where it started. And then you can see the market is rallying. The fact that the gold market is rallying means that money is moving to safety. Now let's take a closer look by moving to a smaller time frame. We're going to move to the daily time frame. And here's that up-down move that I said earlier in the monthly chart. This indecision where it moved down, moved up, okay? But I'm going to move back briefly back to the monthly chart, and you'll see that we are slightly short of the 61.8% Fibonacci line. This is a very important ratio, and we've got two prongs there. Now I'm thinking a third prong up to this line would make it bearish, so we'd be due a correction. And given the circumstances in the world, whilst this is a bearish pattern, I don't think that this pattern is going to work given the fundamentals, and that the correction we'll see is probably only going to be as much as this, that much there. So, but even that on a monthly chart is quite a lot of money. So that's the sort of correction I'd expect here before it continued higher as money moves to safety. I don't know if there's any more I can tell you about this. In gold, that's the daily time frame. Again, if you're going to trade this, then you need to be looking at the smaller time frames. Let's look at the 60-minute briefly. Here we have the 60-minute chart, and you can see that from this high it's correcting down. Now I would expect this to go higher. Now if I wanted to trade this, and if I wanted to trade it short, if I want to trade it long, I'm looking for a correction back in the opposite direction. That's often quite difficult to find, particularly in a bull market, and this is a bull market. So what I would be looking for is to trade it perhaps short, but once it's reached an extension. So in terms of an extension, I'll be looking from the high to the low. I'll be looking at the 1272 here, and that roughly coincides with the 61.8 I showed on the monthly chart earlier. And then we'll be looking at a correction lower of around, the harmonic for gold is $10. So I'd be looking for a correction of around $10. Hope this video is helpful. There'll be another video out in a few days, or at the very most a week, as things unfold. So keep safe, and I'll see you soon.